How can I reduce my income tax? Preparing for Thanksgiving, you may be wondering, can I deduct my Thanksgiving dinner turkey? 2022 is just around the corner. Before we ring in the new year, we need to make sure we are prepared. If you're looking for ways to reduce your tax liability for the coming year, you may be curious what you can take as a deduction for 2021 tax period. It's important to remember that if you itemize your deductions, the amount needs to be larger than the standard deduction to make it beneficial. You cannot itemize and also take the standard deduction. The 2021 standard deductions are as follows. Married filing joint is $25,100. Married filing separately is $12,550. Head of household is $18,800 and single is $12,550. Here are 10 most common deductions or credits if you choose to itemize your deductions for 2021. You can deduct 16 cents a mile for medical purposes such as driving to a doctor or hospital appointments. If you file Form 1040, you can only deduct the amount of your medical and dental expenses that is more than 7.5% of your adjusted gross income. The expenses must be in the current tax year also. This credit allows people to take a deduction for taking higher education classes. In order to claim the full credit of $2,000, you will need to have at least $10,000 of expenses. The taxpayer needs to fall within the income limits to be eligible for this credit. This is a dollar-for-dollar reduction on the amount of taxes owed. Included is tuition, fee payments, and required books or supplies for post-secondary education for yourself, spouse, or dependent child. This is not a refundable credit, meaning the credit can be used for offsetting your tax liability for the year you are filing, but will not result in a refund if it reduces the entire liability. The credit is not available once your income exceeds certain amounts and can't be claimed at the same time as the American Opportunity Tax Credit if the expenses are claimed as the Lifetime Learning Credit. The Tax Cuts and Jobs Act allows for all state and local income taxes, including property taxes, to be deducted. This deduction is limited to $10,000. Next is the Retirement Savers Credit. Contributions to either an individual retirement account or employee-sponsored retirement plan may allow for eligibility to a non-refundable tax credit. The restrictions to this are over 18 years of age, not a full-time student, and not a dependent on someone else's tax return. There is an income cap of less than $33,000 if you are single or less than $66,000 if you're married and filing jointly. The contributions you make to a retirement plan, such as a 401k plan or traditional Roth IRA, gives you a tax credit of 50%, 20%, or 10%, depending on your adjusted gross income and filing status that you report on your Form 1040. Any rollover contributions do not qualify for the credit. The maximum contribution amount that qualifies for the credit is $2,000, $4,000 if married filing jointly, making the maximum credit $1,000 or $2,000 if married filing jointly. The IRS has a chart to help you calculate your credit. Mortgage interest paid is limited to the interest on $750,000 of mortgage debt if married filing jointly and $375,000 if single or married filing separately. But this can be a deduction on your income taxes. In addition to mortgage interest, you can deduct mortgage insurance premiums and real estate taxes that you paid during the year for your home. Since the pandemic, many people have transitioned to working from home. You may be able to write off costs for home office expenses like rent, mortgage interest, utilities, real estate taxes, repairs, or inventory. The maximum student loan interest deduction is $2,500. If you are single and your adjusted gross income is over $80,000, or you are married filing jointly and your adjusted gross income is over $170,000, you can't deduct your student loan interests. If you made upgrades to your home that fall under certain categories, you could obtain an energy credit. This credit is usually 26% of the installation costs for property placed in service after 12/31/2019 and before 1/1/2023. Example of things that are included are insulation, roofs, solar energy systems, windows, doors that are energy efficient cooling and heating system, and also small wind turbines. 100% of your adjusted gross income can be deducted for qualified charitable cash contributions. Donations of items or property are also considered itemized deductions. The CARES Act allows a deduction for up to $300 for money donated to various charitable, educational, scientific, or literary and purpose organizations. This can be taken with a standard deduction and doesn't have to be itemized. Take the time to get your ducks in a row and prepare for our tax filing season just around the corner. If you can't get all those ducks lined up, you can take the standard deduction. WatchGuard Tax Services. Welcome to the solution.